Ed, great to have you on the podcast here today. How are you?
Very good, thank you. I just got back from London to New York to West Coast, back to New York trip. So just happy to be in my own space.
That's a lot of travel. Racking up those miles though, when you have to go that far.
Yeah,
Uh, wow, those are long trips.
they're long trips.
Well, Ed, I'm really excited to chat with you here today. For folks that don't know Bud Financial yet, would love to hear kind of just a quick overview before we get started, and then I have some questions. But as I told you, like very much, I like to keep these casual conversations. So let's start there.
Yeah, so Bud Financial, we are a fintech B2B company. We have been around in the B2B guise for about 7 years. Before that, we did 2 years as a consumer app in the UK. We focus on helping banks and fintechs take their core data, so typically transaction data, turn it into a bunch of actionable insights for either internally in the bank to understand what their customers are doing, or give the customers of the bank or the credit union members sort of insights into their spending, and so they can make better financial decisions.
So, what kind of problems are you helping these banks and financial institutions solve? Exactly, what type of information are they looking for?
So there's this idea that, like, I guess we all have of our bank, which, because like they see our spending, they know everything about us, and they have sort of like a bunch of machines and algorithms processing all this data, and they're able to kind of like accurately target us. I think we hold that in our head as a thought, but at the same time, we also get these mail shots from the bank that we've been with for 10 plus years, which offering us products that are completely irrelevant to us. Like all of our mailboxes are full of that stuff. So the reality is that really, like, almost every single bank we've ever spoken with, which will be, hundreds, maybe the next year it will be into the thousands. We've never come across a bank with a system that is able to process their own transaction data and leverage that across the bank and show customers real insight. No one's built that. There's a couple of people that have built sort of poor versions of it. It's really in the kind of era of sort of more advanced AI models that we're able to do that very accurately now. But yeah, the reality is banks don't have that, and we bring that to them. So there are many pains and solutions that come from that. Some around just giving a better customer experience is a simple one. Another one is customers see like transactions that don't have a merchant identified, a location, regularity of how many times you've been to that merchant. Customers often will call the bank and say, I don't recognize this transaction. And that actually costs, depending on the scale, the banks hundreds of thousands up to tens of millions a year just dealing with those. So that's a really simple use case we solve, but there are kind of, in the world of AI, much more advanced use cases and problems we solve.
Yeah, the not knowing about certain transactions is actually pretty frustrating. Like when you look back over the years to see like how little information is actually like as the consumer it has been available on that end too. And I always think when when you have to even from a different side of things, right? From the business side of things, when take a picture of your receipt, so you're logging your receipt. I always said, why do we even need to, like, shouldn't we just know everything about the transaction so then our accountants know everything about it? Like, to
Yeah.
me, it was always crazy to be like, take a picture of this receipt. Anyway, side tangent, but
I'm very bad at that. Also a side tangent. I'm very
oh
bad
yeah,
at doing
the only reason I'm saying it is PTSD because my accountant always chases me down for those those items.
Yeah. No, absolutely. Yeah.
What when we like so we hear a lot about personalization in banking, but what does like good personalization actually look like to a customer?
So when a bank is doing personalization, they're doing it off of, and I used to, before I started, but I worked at Salesforce and so a lot of CRM tools, and the personalization that the kind of like CRM tools are doing is off of like, where do you live? How much do we think you earn? Or how much did you earn at the time of your, when you opened the account or when you took out the last credit product, your age, that's really it. And so in financial services, like, good personalization is basically knowing the customer almost as well or better than themselves, and then finding them an opportunity to improve their finances in some way, whether it's a product or just a helpful nudge. For me, that's what good personalization is. The nudges build trust, and then that makes the financial offers, either sort of tailored to you from a data perspective, or kind of like more readily taken up by the individual because like they already have some sort of trust from the bank or the credit union.
Can you give I guess, I always like, give me a complex example and a simple example of how transaction data can continue to lead to a better customer experience?
So like a really simple one is you have a credit card bill that goes out on the 17th, and we notice on the 15th or the 16th that you don't have the current funds available. And we know when your payday is. So there might be an immediate action. We could know a week out that or whenever we decide. So that's a very simple one. A more complex one is kind of like understanding your FICO score, understanding through looking at the transaction data, like if we have like the primary account or even if we have aggregate accounts, we can see almost all the different financial products you have, because there's typically a flow of money at some point throughout the year. We can identify those and then say like, maybe you have, you're paying off two loans and we actually think there's a consolidation effort that could be done because we know what the loan rate is the bank is offering or the loan rate that exists in the market. So that's like slightly more complicated. Still, I guess, simple to think about, but it's just bringing lots of data points together. If you think about a bank, like say a big bank, or even just like a sort of a mid-market bank in the US, they've got 1 million customers. They've got no machines that are processing this, and there's no person going through individual transaction statements to do this.
Now, what kind of reaction do banks have when they start seeing the insights that Bud Financial can uncover? Are there any like light bulb moments there?
Yeah, I mean, like this is for like many years we were kind of saying, look, we just have this transaction intelligence and like look at all the things you can get from it. And banks were like, yeah, that's kind of cool. I guess maybe some banks. But then about 2 years ago, we started building this product we call Drive, which is like more of a platform. You can go in, you can have the data visualization. We can segment customers based off of like really anything in that transaction data. And so what we often do with a bank is like give us a small file of your customer data and we'll pull out a bunch of insights for you. We just give them a login to the dashboard and there you can see a whole bunch of things. Like we can see, the credit card usage, what credit cards, what products the customers have. That then gives the bank the like insight to say, oh, actually, I didn't realize my customer. I thought my customer is like a really simple one. Most banks say. I just would assume in the US that Amex was the biggest credit card, and in your customer cohort, it's actually not. And you're working on a partnership with Amex, as an example, or buy now, pay later, it being a big thing. What do they use? And like, when are those used in the month? And then there's exact like that then leads the bank to say, hey, actually, I could probably offer a product that is specifically tailored to my customer cohort that maybe is competitive with Capital One rather than trying to think about being competitive with American Express.
When you think through personalization efforts, have you seen any of these efforts backfire or ever miss the mark? I guess a thought like, what makes the difference between helpful and creepy?
Yeah. I think the creepy thing was like a big concern, I guess, like 5 years ago, when everyone was kind of concerned about Facebook data and being like over personal. I think in financial services, if you're offering something helpful, you kind of very quickly are not creepy. If you start to say like, hey, like you started shopping at these certain merchants, therefore are you about to have a kid? Like, do your partner started, doing these spending on your joint account? Like there's maybe that's a little bit far and there's no financial outcome or financially related outcome directly. So it kind of doesn't make sense. Where we've seen backfire is just like core inaccuracy. So like something like at our core is we began building this language model around 2018 that understands bank data very well and is like very tailored to that. There's two things that can go wrong there. One is like your model's not accurate enough, which is most of where we get brought in. Customers are using other supplier or sort of banks are using other suppliers, or they built something themselves and maybe they've reached something like is an industry, like pretty good in the industry. It's like 80% accurate. But like, if I was going to know you as an individual, Jared, like your financial world is, I'm assuming is, you're making hundreds, if not thousands of transactions a year. And so if you're 20% inaccurate, those errors add up. And like, actually, if I want to give you an insight, it's more likely to be wrong than right if I have a high degree of inaccuracy. So we focused many years and spent a lot of money, as our investors will relay, developing like really accurate, granular customer enrichment. So up to like the mid 90s in the US, and like our older models or more advanced or more mature models in the UK are like 97% accurate. And then we have to build customer specific context models that get you a little bit further. So like things like, we can see that this transaction is regular, even though it doesn't seem like a subscription. It is something that you regularly spend at. Therefore, we might know that when you get a receipt back from that merchant, it's a receipt and it's not an income, as an example. Like that often gets done because like sometimes, you know, you have a return that's close to your income, that can be done. Or even small things like you go to a gas station and you spend $3.50. That's, you probably didn't buy gas. It's probably a convenience store purchase. So all of those little things add up to like being able to understand you much better. And that's kind of been, I guess a lot of people have promised personalization, and the miss has been that they haven't focused on the core problem, which is that accuracy of understanding the transaction from a machine basis. And they've gone to like the cool bells and whistles and to like pie charts and things like that before.
Yeah, I would say, going back to the earlier part, right, of the creepy, I think you're totally right. I think that was more of a conversation 5 years ago. Um, I think it's more creepy now if you're so wrong with what you're offering me,
Yeah.
right? Like I would much rather, like, this information is not like information I would care, right? That even got like spending habits and stuff like that. So if I could have that more personalized to have a better understanding of, who I am and what I want, that's awesome. Would love to kind of shift the conversation to a newer segment that I'm
Hmm.
trying out, where it is basically allows you to put your storytelling hat on.
Right.
That you've been building this company. Talk me through something that you can laugh about now, but probably when it happened, you wanted to cry a bit.
I still cry a little bit about some of these things. I mean, there's things that we got. I mean, there's many things we've got wrong, right? So we've only started really scared. Like we've been, you see all these things on like LinkedIn and stuff of like, look how fast, you know, Cursor AI scaled to 100 million in revenue, like in like, you know, less than a year. And then look how long it took this one company to get product market fit. And like we're on that curve, like very much at the, you know, we're at 10 years now, and getting product market fit is like just happening now. And it's like you can feel this pull in. And so it like, you kind of, well, cry or laugh at some of the missteps. In 2017 to 2019 in the UK, we were helping kind of three big banks build challenger apps. We were running the go-to, like we were doing the go-to-market, we were doing customer communication for them. We like ran the whole thing. And some of those banks actually invested in us at the time. So it was like very much from the top of the bank, like this is something we really want to do. And then within the space of 6 months, all of those customers just decided, hey, we're not going to let a third party run an app for us, like our whole app or brand and something like that. So we got unceremoniously dropped by pretty much all of our customers at once, and had to, like, the not funny bit is like having to obviously let go of a large amount of the team. You get a headline of like, basically you're a big failure. And you have to like, you know, sit face to face and like let go of a bunch of people. But looking back, like it feels obvious that that model would have never worked. But it, you know, the kind of like unknowing world of doing that, we thought it would work. Another one is like 2018, 17, 18. We're also like made this big announcement that we've like flattened the hierarchy of the company, and we're going to be this super, like everyone's going to have autonomy. And the reality is a lot of even great employees don't want the level of autonomy that we were giving them. It just seemed like a good idea. As young founders, we were working at big corporates before. We didn't get much autonomy, and we just gave people too much, and it was very inefficient, and like actually like a very difficult place to work because of that. So yeah, there's a few things we've tried. I think don't try and innovate on those core business models that are tried and tested as much as they seem like a nice utopian idea.
Yeah. Even like employees, they'll talk about full like autonomy, and then when they finally get that autonomy, they realize that it is like it's almost like they're running the business. And
Yeah.
the reason, right, that some people don't start these businesses is very, very difficult. There's a lot of work involved in the whole process. Interesting with what happened. You talk about some of those platforms, right, that we always see every single day on social media. They hit this with this amount of employees, and but I think it's what's his name, Greg Eisenberg. Do you know like you see him post? I think that's his name. He always calls out these companies, and not like I'm always about positive and like congratulations to all these companies for what they're doing,
Hmm.
but a lot of that is vibe
Yeah.
revenue.
Yeah.
Like anyone that's tried a lot of those products, it's cheap. You can immediately, put your credit card information in, and it's kind of painting a picture for the people that are like building companies over years.
Hmm.
It's not painting a complete picture.
No.
I always look back to the really exciting like example of UiPath and how they scaled from like essentially just doing consulting and not making that much in revenue for a long time. And then just it seemed like over a 10-year period, it was like they flipped the switch after all these years of learning, and this created this massive company. I think that should be more of the norm that we point to than these vibe, revenue success stories. I don't know. That's just my two
No,
cents.
definitely. We have a couple of me and my co-founder have a couple of posts that we will probably make at the end of the year that shows this. It also shows the difference between regions, and like we had like some really great products in the UK, but the way the market works in the UK is very hard to scale there. We have, a handful of customers here now that have completely outscaled the entire UK business in the last 3 months. And it's like great on one way, but also like a little bit painful. And so that's the other thing, being a UK based company for many years with some like customers in Australia as well, but so similar market to the UK. And then coming to the US, we would always see these SaaS businesses like hit this crazy scale in a short amount of time. And I just sat there thinking, we're terrible at business and we're idiots. And both of those may be true, but not to the extent that we believed it to be true.
Yeah, and then you go to pitch a US investor and they point to that as like the example.
Yeah.
And it's like, I don't know what we're doing here. Have you tried it? Have you tried? I've tried all of these Vibe revenue platforms, by the way, and
Yeah.
they're good,
Yeah.
but they are not worth 100 million in revenue. It doesn't even make sense.
Well, you can switch them out tomorrow. Something else better comes along. It's kind of very easy to switch out. Now, some of these I've used Cursor and Replit, and we use both of them in the company, and we love them, just for the
Hmm.
record. But who knows? Who knows?
Yeah,
Like
but
what
there's
the
also
next one's going
10
to be?
other ones
Yeah.
that like, that, yeah, it's, but by the way, I am a big fan of Cursor and
Mm.
Replit out of all of the ones out there. And I think they'll start to create more moats, some of these companies. Yeah, which will be interesting. As we wrap up here, Ed, like what's next for Bud Financial that you want to share with us here today?
Yeah. For us, I guess we're just we're just in full execution mode right now. We are tracking to our profitability point at the end of this year, and we want to scale off of our own backs for a little while. Margins are moving in the right direction, so that's great. And then the next thing we're thinking about is like we're implementing a bunch of AI products into banks. Obviously, like banks and financial services are a little bit more risk off with its technology than other industries. So of course, like the next wave is agentic models. We have been developing some of our own, picking up tools, seeing how accurate we can get with those, and then putting them down again as like the scale laws and the costs get really high. But I think that's something at the end of the year we're going to start to reinvest in, and it's like super exciting. Like it definitely has a lot of potential financial services from internally running the bank as well as externally, like helping people to like manage their own money, like not even need to manage their own money in the same way that they do today. So that's pretty exciting, and we've definitely got all the foundations to make that work.
Love it. And are you have any events on the horizon?
Well, I've just done 2 back to back. I just did Fintech Meetup, which was great, and then I went to the NVIDIA GTC and like we have some customer stories that we're working on that we announced that we're using NVIDIA and things like that. So that was pretty cool. Myself, I did 180 days in hotels last year, and so I will be taking a bit of a break from events for the next 2 or 3 months, just focus on like the business and managing the business a little bit better. But yeah, I'm sure I'll be at an event in about
Have
2
any
months.
advice for me? I have 70. I was going crazy. I'm gonna have 70 days this year. I just started planning all my trips. And I mean, to do 100, that's great. Like I'm even looking at 70 and I'm like, that's a lot.
It's a lot.
Yeah, any advice?
God, I don't really know. Do you have a family? No.
Just
Well,
kidding.
yeah, it's the only way to make it possible.
You can't, you wouldn't have one for, potentially very
No.
if that became a every year thing, right?
Yes. Well, I've done that for the last 2 years and it's just horrendous. I don't really know. I mean, I think the main thing is just like, try and eat as healthily as possible. And that's because that's the biggest challenge, I
Oh, that's
think.
impossible
Yeah.
traveling. It's so,
It's,
yeah.
yeah.
Especially when every event's in Vegas.
Yes. Yeah. There's no salad bars in Vegas.
No, no.
As much as I would rather have a burger and chips and tacos every night, like it adds up.
You know what one of my favorite like quick spots is in Vegas? There's a spot in Vegas that's basically like this walk, like the was it the like the Chinese like walk type,
Oh, okay. Yeah, yeah, yeah.
but it's like a more healthy version. It's like Chipotle, but for a walk.
Oh, wow. Where's that?
It's in the mall, the fashion mall,
Oh, okay. Yeah,
near
like
the Venetian.
crystals. Oh no. Okay, yeah.
Yeah, and
Yeah.
I went there way too many times that I care to say on this because I was in Vegas for 2 weeks for a few
Yeah.
events. I'm sorry I missed you at Fintech Meetup.
I didn't realize you were
We'll
there.
have to link up next time. Are you going to be at Money 2020?
I will be, yeah, in October.
Okay, I'll see you there then.
Every
Cool.
year on my birthday for the last 10 years.
Okay. All right.
Yeah.
That's good. It's a good way to celebrate though,
Yeah,
right? In a way.
kind of. Yeah.
It's a good event.
Yeah. No, it's a good event.
Well, Ed, it's been a real pleasure having you on the show here today. Look forward to continuing the conversation. Please keep us up to date on any announcements and wishing you and the team all the best of luck.
Thank you so much for your time, Jared.